Welcome to this presentation, and while it was prepared for American Medical Technologists, it can apply to just about any industry. My name's Dr. Warren Martin, or Warren Martin, and MBA Program Oversight Chair and Instructor at Bryan University. And, as far as my background here, I'm a little bit older. Like I said, I'm currently at Bryan University. I also was in the Army for 21 years. Then after the Army, I worked at Domino's Pizza Corporation, also a franchisee for about 11 years, and then got into higher education here for the last 12 or so. So that's about me. Leadership and business basics. Some points we're going to cover. Overview of an organization. How everyone is a leader. Why you are important. The cog in the wheel, as we would say. You're part of business. The first impressions and how you impact overall business. Why the business environment is the way it is, and the future. You're in charge of your own business, or running a business for somebody else. All right. So basic organization, regardless of the industry, whether it be medical, logistics, food service, maintenance, IT, or just about anything you can think of, even government. Every organization has the same basic operating functions in common. They are all a business. So that's the one thing. Everything operate. Every business has a budget. And all these other things. They also have you, and that's one of my points I want to get across in this presentation is the value you have for an organization or for your own business. So some basic functions. I got a couple of graphs or charts here. Every organization has a whole lot of different departments, sections, might have different locations, regionally or national or even global. Whichever industry you're in, some of these are going to change or be various. But again, basics is you have top level leadership like a CEO. Then within the organization, you have the operations, the training, the human resources, accounting, finance, IT, the logistics of it, the products and service that you would be providing, the customer service aspect of it. So, there's a lot that goes into a company, but at the same time, it's pretty much those are the general functions. The things that are different is what the company is specializing in, what the product and service is. All right. And then there's, of course, you. You're part of that. So everyone is a leader. That's one of my personal things is that I believe everyone is a leader. All your life you've been trained to be a leader, whether you realize it or not. You wake up every day. You do the personal hygiene stuff. You take, if you have kids, you take care of kids. Off to work, you do your job. All the side things you got going on. Other commitments, whether it be something like church or, soccer dad or soccer mom or, all these other things. That's what I call self leadership. You are already doing leadership. It just depends on your perspective about it. There's a term going around about how leaders are born. A lot of folks disagree with that. Leaders are made and developed. You become leaders either through training, opportune circumstances, or just a desire to be a leader. For me, like I joined the Army back when I was like 18, and with time, training, and experience, I developed into a leader of, other people. But when I started out, the only thing I knew how to do was take care of myself. And, I was very young, naive, didn't know a lot. But like I say, over the time and years, I developed skills at being a leader. Likewise, you can develop into a leader of others, if you want to. There's nothing wrong with loving a job that, hey, this is what I want to do. I don't want to be a leader of other people. There's nothing wrong with not wanting to be a leader of others. There's nothing wrong with wanting to be a leader of others either. So, you have that choice, that opportunity. Um, you can be the leader, if you choose to do it. The opportunity is there. You may not see it right away, but it is there. And if nothing, when you finish this presentation, if nothing else, I hope you leave realizing that you are already a leader. It's just at what level you're at, you have to figure out, and you need to be satisfied with knowing that. And again, you may sometimes in courses I teach, I talk about cheerleaders. Sometimes we don't have a cheerleader. You're your own cheerleader, so to speak. So, why are you important? The cog in the wheel story. What is a cog? A wheel or a bar with a series of projections on its edge, which transfers motion by engaging with projections on another wheel or bar. Uh, Another definition is an engine needs each of its parts to work. It has gears which have wheels. Each wheel has cogs or tiny teeth that fit together, making the wheel turn, the engine run. Every cog is essential to the engine. And so that's the thing. Even if you are, you know, a loner, so to speak, you're still part of a system of some sorts. Like I got the military, examples here, but there's also other things out there, where you people depend on each other, you help each other, you're part of that system. Uh, Even like in the operating room, there's more than one in there, everybody has a part to play, even the people you don't see here, the people who do the maintenance, the people who, make all the medical equipment, sterilization, all the things that go on have different people with different functions, and they're all part of that that machine. If you like the solitude of a job where it's just you, but you're still contributing, you're providing some sort of product or service that contributes to society. All right. So why are you important? Again, today or in the future, you may be running a section, department, or a company, or you may be doing your own business. So it depends on where you're at now and where you're going to be in the future. Your success, regardless of where you're at, once you get into like the supervision, the leadership part of it, will not be because of you. Sometimes people kind of think it's all about them. It will be successful because of the people who work for you. And so, like right now, wherever you work for, the company, the business is successful because you are there. You're part of that success. And you just need to remember that down the road, be it 5, 10 years ago, that it's the people who work for you that make you successful. All right. Um, so another part here I got is first impressions and how you impact the overall business. Chances are, I'm assuming that you've been to a business with terrible customer service. I use the drive-through here as an example. My consumer behavior courses I teach, I use fast food places as an example of poor customer service. Um, because I mean, I think they've gotten much better in recent years, but the fast food drive-in where they act like they're doing you a favor when you're come through there. The bottom part of the slide here, I have remember that first impression, the bad attitude, impoliteness, acting like you are bothering them. The hygiene, grooming, appearance, interaction leaves a first and a last impression. Uh, One of my pet peeves is I pull up to, it could be a donut shop or a fast food place, and employees are outside the front door smoking cigarettes. That's an automatic, I guess, turn off or whatever you want to call it. Again, it's that impression. All right. Uh, a hospital. Um, there's probably a hospital you would never go to again or recommend. I know in our case, we have one. The example, my wife's mom, she has dementia. She's in an assisted living facility. So they called us one day because they sent her to the hospital. Okay, because she thought she was having chest pain. She ended up not being a heart attack or anything, but at the time they thought it was. Sent her to the hospital. So we got there about an hour or so later, uh, asking where she's at, and went to the ER, and they said, "Oh, she's still in the waiting area." So they left this 93-year-old woman with dementia, took her off the ambulance, and rolled her in to the waiting area, and left her there for 2 hours. So there's a hospital we'll never go, again. So that's an example. But there's also the example of just rumors. Again, everybody makes an impression on the organization, and that includes you. How do people see you? All right. You may not realize that people are always watching you. You may have a positive influence on people. You may be an example that others emulate. You may be that first impression. How others see you impacts the business you work for. So it just depends. And I will add that with the marvels of Facebook. Now, some of you, uh, that's the only thing you may have known. It depends how old you are. But Facebook's only been around a little over 10 years or so, well, to 15 maybe now. Uh, but again, because of that, I've had several people, connect with me on Facebook and just mention that, the influence I had on them, even though I didn't realize I had that influence. So again, that goes back to my point of people are always watching. Um, After I got out of the Army, I did Domino's Pizza. I worked for the corporate in Seattle. So I ran between 10 and 15 stores up there. And then later on, I went to Philadelphia, did the same thing, 10, 15 stores. But one of the things we did, a recruiting method we had, was you drive through somewhere, go into lunch or dinner, and if somebody really impressed us, you give them a business card. You give them an "You impress me" card. This card I have here is a copy of an actual card, um, and so we would try to steal people from other you know food type places. But again, it's because there's always that person that impresses you that's real great, but then you got the ones that are not, and they leave an impression of the business you happen to be in. So when I was still in the Army. So this is one of those little stories. My wife was with me. I stopped and ran into the shop at which in Missouri, or civilian terms, is the Quick Trip or the Quickie Mart or 7-Eleven, whatever you want to call it. So when I came back out and got back in the car, and now I was in full uniform, wearing my beret and everything, and my wife was chuckling, and I said, "What?" She says, "You didn't see that?" And I said, "See what?" All the different soldiers out there, as soon they just jumped up to attention when they seen you walking by, uh, and I didn't notice, and so she thought that was funny because, and again, my point is, we sometimes aren't aware of who's seeing us or watching us, and so that's my point there is, we don't know, and that's why we should always be aware of what we are doing in our professional lives, in our jobs. Um, you are important, you contribute, you provide value, and you provide an example. All of this applies to you even if you don't realize it. So that's just following up on my previous point. Okay, so how does all this transition to business? To you, uh, to your part as an employee, and to your part in charge of a section or a department, maybe one time a whole region, like I was running, like say, I was like the regional director. So, or when you own your own business. So in my case, I transitioned from being, the regional guy to owning my own for a few years. So how does this all translate? It's self-leadership. You have to have the leadership, understand, how you're going to impact it, but you also have to understand, okay, what happens once you're in charge? So, okay, congratulations, you're in charge. All right. So again, regardless of the industry, every organization has the same basic environmental influences and functions. Okay. When I talk about environmental, I'm talking about the environment of the business, not the ecosystem right now. So I got the little graph on the side, and that's just generic. But again, I go back to all businesses are similar. All right. One of the important things about a business is its budget. All right. So again, regardless of what your business is, you operate on a budget, and you have to keep to that budget. It's great if you do more sales than you projected, but you have to keep the minimum of the projections. All right. So I got an example here on the right that you won't be able to see, but it's just an example of a profit and loss statement, a P&L statement. The budgeting of a business, owning or running a business operates on percentages. Okay, so I got 100% there, not 110% and not dollars. When I was running stores, and everybody I know that runs a business, yeah, they're aware of the dollars, but they look at it in percentages because you only have 100%. Okay, so like in this example here on the right, this is a P&L statement. This is 1 or 2 pages, so it keeps actually going, but it has all the things on the left there, the different expenses associated with a business. And so I'm not telling you to scare. This is just standard stuff, really. I mean, things like, oh, the electric, if you got water, gas, the phones, the internet, so you got all these different things. And again, depending on what industry you're in. So this is like for a pizza store, back from, so it has a lot of extra stuff that some businesses may not have. All right. So again, we're not talking about dollars, we're talking about percentages. Okay. Same thing with our personal budget. We have X number of dollars a month in income. We have things we have to pay, our rent, the car payments, different things. If you got kids, you've got a budget on how, what you're spending on them. And so, the month goes by, and then you go to the supermarket, and you get a bunch of groceries. You go up to the cash register, but you don't have any money to pay them because, you're at 110% now. So that's the thing with business. You have to stick to that 100%. And so I'm getting to a point here on why it's important. Um, as an employee, you're an investment, all right? So aside from some of these little graphs and numbers I'm showing to you, if you are an employee, companies spend a lot of money on you. And again, you may not realize it. When you get to a position of management and leadership, you will realize that, oh, you're spending money on employees. When an employee leaves, they call it as turnover. Um, that's an expense. The amount of money, like an employee comes to work for 2 months and then leaves. Well, the company just wasted the thousands of dollars in labor and training and all this other stuff. So there's a lot that goes into the other side of business. On the left side here, I got a short list here of just a typical P&L expenses. The rent, the electric, gas, phone, leasehold. I put leasehold in there because sometimes people get into business and they don't read the leases real close. They don't have like an attorney checking for them because, and I found this out with Domino's. Every once in a while, one of my stores, our P&L would have like $8,000 leasehold expense. And it was because the landlord decided to pave the parking lot, but in the lease, uh, we pay for it. So when you're operating month to month, if you were a franchisee with one business and something like that happened, I mean, you'd have money problems. So, but anyway, so I got that leasehold there, and I got all the other stuff, and then there's you, and that's like the labor, the cost, and associated taxes, and then profits. So anyway, all this adds up to 100% there on the left. So on the right side, I kind of got a short example using like $1,000 as a base there, and I kind of got it broken down in different percentages. As you get down towards the bottom, I got there, then there's your part, 25%. So that would be like the labor of the monthly expense. Okay, so that's the budget. Now, more of the budget. Depending on the industry you're in, I got the ketchup and cheese factor here. All right, so with the ketchup, um, and it may seem like something little, but you go to McDonald's or wherever you go to, and you ask for ketchup, and some will say how many, and then you say, oh, just 2, and others will just give you a handful, 8 or 10 of them. All right. So, and what I'm getting to here again on this budget layout here, I've got the X's in there. I'm not really putting the money, but when I get down to food cost there on the left, um, I got 25%, and then underneath that I got a line called ideal food cost. So that's what's in your budget, your ideal food cost, how much it should have cost or should cost for the products or whatever it is you're making. All right. So hypothetically, the ketchup 2 packets is budgeted per order French fries I send out or whatever. Okay. And so it's 3 cents. But they hand out 8 instead of 2, so you get this extra 6. So they're spending extra 6 cents every order of French fries they send out. And so may not seem like much, but when you're talking tens of thousands of extra 6 cents, uh, you're talking thousands of dollars over budget. So again, This goes back to what type of employee you might be, what type of employee you want working for you, things like that. So here, and then so I got my cheese factor here, the pizza maker who really loves cheese and thinks you do too. All right, so maybe all of us have gotten now. Maybe there may be some cheese lovers in the group here, but either way, I got this example again on the left here. Where the ideal food cost is 25%. So on the right here, I got the little breakdown of ideal food costs based on the ingredients required to make the product. And this is the label that goes on a pizza box is counted. All right, all these little things. Hey, if they send out 2 napkins, that's part of the ideal food cost. All right. So I use cheese as the example. Like a pizza that requires 5 ounces of cheese, ideally. Okay, so we got 320 ounces in a 20-pound case that costs $50. So roughly an ounce of cheese is, about 0.15 pennies. So the scenario I used to use with my managers when they were over on their cheese or over on their food costs was, the two, because it was generally something like 2 ounces or something like that. So if you use 2 extra ounces, that's an extra 30 cents. But when you multiply 30 cents by 8,600 pizzas in a month, that's $2,480 that you spent more than you should have. And if this was to happen in 15 stores, you're talking $37,000 above budget. Now, this has never happened because you won't let it go that far. But hypothetically, that would be what the scenario is. So, in our situation here, we use that example of, hey, this store spent $2,400 extra dollars. Well, instead of 25% food cost, they have the 40% food cost, and that would put them over budget, which means they lost money. And you might get away with it for a month if you're part of if this store was part of a group. But if you're a one store operation, a franchisee, and the people working for you, spent more cheese than they should have, you won't be able to pay some of your bills because you're at 115%. So that's the point there. So another issue that would affect your budget, why resistance to $15 an hour? All right. How does this impact your budget? And now, me personally, I think there needs to be $15 an hour. However, I think there needs to be a way to do it. And so that's what I'm going to get into here. But this affects how your business operates or how you would operate if you get your own business one day. All right. So here on the left side, we got deductions. A lot of folks I find out don't really understand that that employers pay a lot of extra money on top of the salary they're paying already or the hourly wage. So for employers on the left here, I got SSNs for Social Security. So employers pay 6.2% of your wages. They pay the 1.45 in Medicare. They pay the federal unemployment tax, the state unemployment tax. So all these add up to 16% of whatever the wage was. Now that federal unemployment caps off at 7,000 during a year. So on the right side, I had the same numbers except I got 0 for the federal. However, if you're in a business where you have a lot of employees that are part-time and they don't get up to that $7,000, you're paying that 16% on every paycheck. But for sake of discussion here, I'm going with this 10%. So now also this number here, the 10%, does not include workers' comp insurance. Some states base the insurance on your payroll, and so the percentage might stay the same between 1 and 3% for your workers' comp insurance. But if your payroll goes up, the dollar amount goes up on that also. All right. So the bottom here, left side, we got hourly rate. So we're talking about a $10 an hour employee, 40 hours a week, it's $400. We add that 16% in on the federal taxes, $64. So the employer is actually paying out $464. All right. So on the right side, let's go with the 10%. So it's $440 they're paying out. All right. So our scenario here, we got our budget on the left. All right. And then I got that U part, which is the labor, 25%. So businesses, a lot of businesses run an average labor of 20 to 25%. So I'm on the right side here. But there are some businesses that are as high as 60 and 70%. So it just depends. All right. Then you have the related taxes, 10%. The workers' comp, you add another 1 or 3%. All right. So you're up to 35, percent or something that you're probably paying out anyway. All right. So when hourly wages increase, the dollar value of these percentages also increase. The percentage don't change, but it has a higher dollar value if you're going to pay a higher wage. All right. So in this example here, I'm going with a small business that has 300 employees, and I'm using this as an example because when I was running stores, I had about 300 and something employees between all the stores. So, but anyway, so we got the 10-hour an hour. So I got the math here. The 10 hours, $10 an hour, 400 a week times 300 employees, $120,000. All right, times 4 weeks in a month gives us $480,000. Now we're going to add that payroll tax. So when we add the payroll tax of 10%, it brings our total payroll expenses to $528,000. All right. So, the employer paid 48 in taxes, and in addition to the 480,000 in wages. All right. So now let's say we go ahead and do $15 an hour. All right. And again, like I said, I'm not opposed to 15. I'm just showing you this so you understand the math behind it and why there is so much opposition to it. All right. So $15 an hour, same employer, 300 employees. That 15 an hour is now 600 times 300 employees. So it's 180,000 in payroll. So that was an increase of $60,000 for just 1 week. All right. Then we multiply by 4 weeks. So we got 720,000, which is an increase of 240,000 in just 1 month. And to 10%, so we're up to 792,000. So the employer pays, 72,000 in taxes in addition to the 720 in the wages. All right. So bottom 2 lines here. So I got the $10 example. Payroll for a year was 6,336,000. Okay, with the change upping to $15 an hour, we now have annual cost of 8,640,000. So that's an increase of 2,304,000. All right, or 36%. All right. So the question you would ask yourself if you were an employer and you had 300 employees, where are you going to come up with $2 million? All right. And again, remember, we're talking about percentages. I got that 36% there. So again, we got to look at, percentages. So I got these examples here again, the top part here where we're going to do just 10 employees. So instead of having the big numbers, we'll just go small, like, hey, you own your own business, or you work for somebody that has a small business and there's just 10 of you there. You get your hourly wage, the 10-hour monthly wage would be 16,000. Okay, and the taxes, that would bring us up to 17,000 a month paid on payroll. All right, so that would annually be 211,200. Okay, the tax on that was 19,000. Okay, so jump down to the bottom half of the page. Hey, $15 an hour. Small business now has to pay $15 an hour. So that jumps the payroll, the wages up to 24,000 from 16,000. Add the tax, another 2,400. So the monthly cost is 26,000. Brings the total annual to 316,800. 31,000 is the tax, but it's an increase of 105,000 for the small business that just has 10 employees, and that's a 32% increase. All right. So again, just a small business, 10 employees, where are they going to come up with $100,000 a year? Because small business owners don't pay themselves a lot. In this scenario here, the owner probably wouldn't even be paying themselves, $100 a year. So again, that's where the dilemma is, and the argument is, where did it come up with this? All right. So remember that budget example? So on the left side here, I got all these different expenses, and I got the percentages, and then I got this third column over here with the red arrow pointing at that 55%. So in this scenario we just did, we learned that for any business, a jump from $10 to $15 an hour would result in about a 30% increase. Okay, uh, so where do you find that 30% if your budget is only 10%? Most businesses that do a budget, they recommend you do 20% budget for profit, but a lot of businesses can't do that. Most businesses 10% or something, or even lower. And I'll get to the lower here in a minute. But so in this typical scenario, um, you know, you can see the bottom there, 120%. This business, you wouldn't have the money to pay the payroll. So, and that's why when different states pass these laws, up in the minimum wage, there's so many that go out of business or they just can't afford it. So I'm going to give you the Walmart example here because I read a few research articles about Walmart. Okay, so Walmart is known for low prices and making billions. And so why is there opposition to $15 an hour? I mean, after all, they can't afford it, or can they? All right. So although Walmart makes billions, remember, businesses think in percentages, not dollars. All right. So the Walmart example, um, the average net profit that Walmart has made for years now is 1 to 4%. All right. So the far right side column there has percentages for different different quarters, and this goes pages. So when I looked at going back like 10 years, I mean, the highest was like a 3 point something, I say 4%, just to round it off. So, okay, so even though it's billions of dollars, Walmart has, it's only 4%, right? It's still boggling the numbers, but still, you got to think in percentages, all right? So, if we remember that $10 to $15 increase would result in an average 30% increase in cost, all right? Given Walmart's historical profit percent, Walmart would actually go out of business in just 1 month because the cost of labor would exceed the profit, all right, by 25, 30%. They wouldn't be able to do it. And so that's why there's opposition. Now, I will add that here, even I read something a few weeks ago, they have made some changes and they've put a lot of people up to $15 an hour. But the question is, how are they doing that? All right. And one of the ways is, to cut jobs. And this isn't just Walmart, this is everywhere. So what I have seen over the years, anytime there was a wage increase, like at the state levels, because a lot of states are up to 15 an hour or jumped up. Back when, like I said, I've been around a little longer, so sometimes minimum wage was, back at 5 and 7, but still, it was the same results every time because of that percentage thing. All right. So, they cut jobs or they reduce hours, increase prices, or they're forced out of business. So, like in the situation, like in my domino years, we were forced to just cut hours, um, versus increasing prices. Because once you start increasing prices, it affects another part of the business. So that's pretty much what you're stuck with. Uh, this bottom part here, the Congressional Budget Office estimates 1.4 million jobs will be lost if this 2021 $15 an hour increase is passed. And that's direct from like I say, the Budget Office, the Congressional Budget Office. And again, it's percentages. Uh, so that's what you got to look at when you're looking at business. What I'm trying to get across to you is understanding why things are. Not that you uh, agree that, oh, we shouldn't give people 15. I think people need 15, but there has to be a way to figure it out. And my personal opinion is eliminate taxes. So that, because when you see how much taxes businesses are paying, if they didn't have to pay a lot of those taxes, they could afford the higher wages. All right, which brings me to taxing those rich corporations. Not a good idea, I've got written there. I know a lot of people would disagree with that, but again, remember how the budgets work and the percentages. When you raise taxes, one, it does reduce the profits, okay? Um, if you reduce the profits, jobs get lost, okay? When you reduce profits, it reduces the pay for the wage increase. It reduces the availability of money to give people pay raises. When you reduce the profits, it reduces the shareholders' earnings, which for many of you is you. And this is another part here. Reduced profits reduces the 401k earnings. So a lot of people own shares in different stocks, and average people, regular everyday people, not the rich people, but middle class, uh, I guess we can call ourselves regular people. And so you make money if you're a shareholder from the profits. If the profits are cut, you're not making money. That impacts everybody, not just the rich people or the rich corporations. Same things to 401k plans. A lot of people have 401ks today, but they don't have any idea where that money is actually coming from. And the money that is in that 401k is coming from portfolios of earnings from corporations that pay dividends to the 401k plans. So here again, when they talk about increasing taxes like 5% for corporations, that is 5% that is being cut from shareholders and 401k plans. So there's a different impact on it. So that's my point there. Again, if you're a business owner and you're going to have a 401k plan, that's going to be another expense because you're going to do, most companies do like 2.5% um, of the pay or something like that. So again, there's more in there. So anyway, so that's that part. All right, so some other things to consider here. Um, Operations. Every business has their operations. They have their training, accounting, finance, the human resource part, and then there's the product or the service you're actually providing, and then the logistics that goes into it. How do you get it to the customers, the consumer, whatever the case is. So so this part here is just, if you're going to go into business one day, there's lots of organizations out there to assist you. You got the Small Business Administration. That's highly recommended because they're the people who will help you set up a budget, set you up with some bankers to get you the money, things like that. The center logo here is Society for Human Resource Management. It, highly recommend you get certified in that if you're going to get into business, because it gives you all the ins and outs and all the policies and updates and everything about human resources. So, and yes, the IRS on the right there, even they have resources that can help small businesses develop. Um, so quick review here. uh, Leadership and business basics. You are the leader. You're a cog in the wheel. Don't forget that everybody's important regardless of um, the level they're at within an organization, because everybody in there has a vital part. Sometimes people think in classes, and by class I'm talking about status in life or station in life. And that's something back from the old, centuries ago, and feudalism and all this other stuff. But everybody has an important part to play in the mission of a company. All right. um, you're the first impression. You remember, people are watching you, uh, and so they are impressed by you or not impressed. And did you impress somebody today, or did they not even notice you? Um, because of the way you present yourself, your professionalism, your personal demeanor, whatever the case is. So these are like self-reflection things you can think about. Business functions. What are different functions within a business, and the business budget. How does that budget operate? How is it impacted by changes? Changes whether you like the changes or not, or whether you can control the changes. A lot of things can be controlled. And then percentages are, and then we think in percentages, not dollars, even though we still think about the dollars, but the business, it's percentages. You only got 100%, just like in your personal budget. All right. Um, how does increasing cost reduce profits, impact profits? All right. And then lastly, but you're in charge. You're in charge of yourself. You're in charge of your business. How people perceive you, how you do your job, all those things, and they all interact together. All right. So with that, I think I've come to the end. Normally, we would do some questions and answers, and that would take up probably another 15-20 minutes or so. But with that, we will come to an end. Appreciate you watching and listening. And if you're watching this on YouTube, I got a YouTube channel that you may be watching this from, or you might be watching the MP4. But either way, I appreciate you spending time here, and that should do it. Thank you.